For decades, traders and investors have known the rules of the silver market. It was a simple playbook. Silver always followed gold. It never led. When gold moved, silver would eventually follow, but it always moved later, faster, and much more violently. During times of market uncertainty, silver was usually contained, held down by forces in the paper markets. These predictable behaviors weren't written in any textbook, but they became the unwritten rules of the game. If you understood these rules, you understood silver. But what happens when a market breaks its own rules? Because that's exactly what's happening right now. Something fundamental has changed. Over the past few months, we've witnessed silver do the unthinkable. It's holding price levels where it historically should have failed. Every pullback, no matter how sharp, is incredibly shallow and gets bought up almost instantly. The selling pressure that would normally send silver spiraling downwards is just being absorbed, like a sponge soaking up water. This isn't the emotional, speculative frenzy we've seen in the past. This is different. The price action feels structural. It suggests that the very foundation of the market is shifting under our feet. The old rules are being broken, one by one. So what's actually going on here? Silver is starting to act less like a speculative trade and more like a strategic asset. The way the price is moving is textbook long-term accumulation. We're seeing large, steady buying that isn't characteristic of the typical retail trader or the fast money speculator. This kind of persistent demand points towards something much bigger. Institutional players or a massive wave of physical buying. These are buyers who aren't trying to scalp a few points for a quick profit. They are accumulating for the long haul. Silver is no longer being treated as a volatile, short-term play. It's being treated as a core holding, and that changes everything. To understand why this shift is so monumental, we have to look at why the old rules existed in the first place. Silver has always had a dual personality. It's both a monetary metal, like gold, and a critical industrial metal. This dual nature created a problem for the financial system. A rapid, uncontrolled rise in the silver price acts as a giant red flag, exposing inflation and signaling a loss of confidence in fiat currencies. To prevent this, the paper markets, primarily futures and options, were used to manage and control its volatility. For decades, the price you saw on your screen was determined by confidence in this paper supply, not just the physical metal. And this brings us to the core conflict: paper silver versus physical silver. The supply of paper silver, contracts, ETFs, and other derivatives is effectively unlimited. A bank can create a contract out of thin air, but the supply of real, physical silver is finite. It has to be mined, refined, and minted. On top of that, a huge portion of the annual silver supply is consumed by industry. In solar panels, electronics, and electric vehicles. Once it's used in a product, that silver is essentially gone forever. It's not coming back into the investment supply. Over time, this constant industrial demand creates a deep and growing tension between the infinite paper market and the finite physical world. So, what changed recently to break this long-standing dynamic? The answer is simple. Physical demand has been relentlessly increasing year after year. It's not a sudden spike. It's a steady, structural increase that has been quietly draining global inventories. As more physical metal gets locked away for industrial use and long-term investment, the signals coming from the paper price are becoming weaker and less reliable. Confidence in the artificial paper-based supply is eroding. The market is starting to realize that a paper promise for silver isn't the same as holding the real thing. And this change in market behavior is happening now before it becomes front-page news. This is precisely why the current rally feels so different from all the others. In past rallies, you'd see a media frenzy with headlines everywhere. You'd see a massive surge in retail buying with everyone piling in at the top. We're not seeing that this time. This rally has been quiet, almost stealthy. The volume patterns don't suggest speculative distribution. They suggest methodical accumulation. It's a classic case of strong, long-term hands taking the metal from weak, short-term hands. This is not the end of a move. This is how major new market phases begin. It's a foundational shift, not a speculative bubble. This is also why just looking at price targets misses the entire point. Most people want to know, how high will silver go? But that's the wrong question to ask right now. The real story isn't the price, it's the behavior. Structural changes in a market happen quietly, behind the scenes, long before the price explodes. By the time most investors wait for confirmation, for the breakout to be obvious and the narrative to be on every news channel, the biggest part of the move is already over. Market regimes change first and the narratives follow later. We are witnessing a regime change in silver right now. What does this all mean for the future? It means the downside risk in silver is now structurally reduced. The support zones that are being built are becoming stronger and more resilient with each passing week. It's becoming much harder for the paper markets to force a breakdown and wash out the buyers. This isn't just another temporary spike that will crash back down. The evidence suggests we are entering a completely new phase for silver, one where the physical reality finally starts to dictate the price, not the other way around. The old playbook is being thrown out the window. So why will most people miss this historic shift? because they're programmed to do the opposite of what they should. They focus on the headlines instead of the market structure. They chase the price after it has already moved instead of understanding the behavior that drives the price. They confuse the day-to-day volatility with the long-term trend, selling on dips that are actually buying opportunities. Most importantly, they ignore these early, quiet signs of a regime shift. They wait for the all-clear signal, but in markets like this, the all-clear signal is also the "you're too late" signal. The rules for silver have changed. The question is, will you adapt before everyone else is forced to? Thanks for watching. If you found this analysis helpful, make sure to like this video and subscribe to the channel for more updates. I'll see you in the next one.